guys, welcome back to another video around the principles of bookkeeping controls. So today we're going to focus on correcting errors. So let's look at how journals are used to correct errors that are either disclosed or not disclosed by the trial balance. And as part of this exam, it's very important that you make sure you understand the difference between those that are going to appear in the trial balance and those that are not. There will pretty much guarantee be questions around this in the exam. So let's look at the objective. So by the end of this video, you'll be able to understand why errors occur in bookkeeping, you'll be able to recognise different types of errors, learn how to correct them using journals, understand the role of the suspense account, and that again is an area that I get asked so much about on the channel. So we're going to break that down and then apply a structured approach to error correction. So quick recap before we get started. First time passes of principles of bookkeeping controls is only 72.5%. So I'm on a mission to get that number higher. Now, if you are somebody who watches this video and then goes and sits your exam, I would love to hear from you. And even anyone else who's sat their exam recently, let me know how you got on in the comment section below, because it's always really nice to hear from each and every one of you. So let's take a look very quickly at some common exam pitfalls. So sometimes students forget to reverse the wrong entry. Sometimes they use a suspense account when it's not required, not balancing off after corrections, and also sometimes they misclassify errors. So key takeaways from that is that not all errors are going to affect the trial balance. That's very important. The suspense account will fix imbalances only. Journals are the tool for corrections, and accuracy is going to equal the reliability of financial statements. So let's move on to what is an error. So just a quick one, just jumping in here just to show you that now we've also got the mock exams on the website. So that's rebecca's financial tutorials.podia.com. And if you go to study notes up here, we've now also got my study notes in relation to the videos that I'm publishing, so you can download those instead of having to make notes yourself as you watched a video. So that was very much asked for in the comment section, so they are going to be, so it's going to be more and more as I produce even more videos down here for you to go ahead and download. And then we've also got the mock exams on here as well. So again, we've got 4 on there at the minute that are all in relation to introduction to bookkeeping that I've created myself, and there's going to be even more for each one of the levels, so watch this space. But let's get back to the video. An error is any mistake in recording transactions. So this could be distorting financial statements, it could cause the trial balance not to agree, and also it could reduce the reliability of accounts. So the first place that we're going to have a look in terms of these errors in journals is the Book of Prime Entry. So what is the Book of Prime Entry? So what that is essentially is the very first place that transactions are recorded. So whether you're on a bookkeeping system or not, we've got books of prime entry. And just to recap what those are, we've got the sales day book, the sales returns day book, purchase day book, purchase returns day book, cash book, petty cash book, and journals. So some key points to remember with the Book of Prime Entry errors is that the simplest errors to correct are those where an entry has been posted to the wrong account. So they're going to be really simple for you to fix in the exam. Some errors cause the trial balance to go out of balance. So for example, when the debit value does not match the credit value, and those will be corrected for a suspense account, which we will look at in a moment. All errors must be corrected to ensure that the accounts remain accurate and reliable, and the same basic approach can be applied to correct any type of error. So just keep that in mind. Now, you might be asked in this exam or a future exam more of a wordy question around why do errors need to be corrected. So essentially, we need to correct those errors to comply with accounting principles. We also need to ensure that the accounts present a true and fair view. It's also to provide accurate information for decision making and to ensure that the trial balance agrees. So there's 4 main points as to why errors need to be corrected. And I think sometimes some of the textbooks and study books don't really go into the why. So I'm heavily focused in these videos to make sure that you understand why you're doing something and also how to do something. So let's take a look at some simple errors. So this could be where the wrong account was chosen, maybe the wrong side of an account, reversing a debit and credit. So the correction here would be a journal entry to reverse and post correctly. So let's take a look at errors that are not going to affect the trial balance. So again, key that you pay attention here because there most likely will be a question around this in the exam. So these are going to include errors of omission. So errors of omission are simply transactions that have been missed, as in they are omitted, they're not there. Errors of commission, so that's just the wrong account of the same type. Then we've got errors of principal, where it's the wrong type of account. And then also compensating errors, so where two mistakes cancel each other out, but they're not correct. So again, these errors are not going to affect the trial balance. So I'm going to break that down even more for you. So starting with the error of omission, this is a transaction that's been completely missed from the books. So that's why it's not going to affect the TB. So for example, a supplier invoice for £250 is received, but it has not been recorded at all. So neither the debit or the credit has been posted, so it's not going to affect the trial balance. Next, we've got error of commission. Now, this entry is made in the correct type of account, but in the wrong individual account. So for example, a payment to a supplier A for £500 has been posted to trade payables correctly and to purchases correctly, so the debits and credits are correct, but it's been posted to supplier B's account instead of supplier A's account. So it's not going to affect the trial balance because your trade payables and your purchases, the number numerically is going to be correct. So that's what an error of commission is. Next, we've got error of principal. So this is where the entry is made in the wrong class of account, therefore violating accounting principles. So an example would be you've bought a motor vehicle for £5,000 and that's been recorded as a debit to purchases and expense in the income statement when it should have been posted to motor vehicles, which is an asset. So here, again, numerically that has been posted, but it's been posted to completely the wrong class of account. So it's been posted in the income statement instead of the balance sheet. So the trial balance is still going to agree, but the financial statements have been misstated because expenses are too high and assets are too low. So that's what an error of principal is. Then we've got compensating errors. So these are two completely unrelated mistakes that just by coincidence cancel each other out. So an example would be that sales are understated by £100 and purchases are also understated by £100. So what I mean by understated, if you've never heard that before, is that sales are below where they should be. Purchases are below where they should be. So we've put sales in at £100 less than it should be. Purchases are £100 less than it should be. So on your income statement, the two balance each other out. So when you look at the TB, it's going to balance. So that's why a compensating error, because they compensate each other, is not going to show on the trial balance. And this is why it's really important that we don't simply rely on a trial balance alone to confirm accuracy, because there could be a multitude of errors that are hidden beneath the trial balance essentially that you can't see on first looking. So this is where experience comes in with accounts, where you look at the trial balance and go, I don't think that quite looks right, when you look at the storyline of a business and what's actually happened in the year compared to that trial balance. So let's move on to errors that do affect the trial balance. These errors are going to create an imbalance. So where we've got unequal debit and credit entries, we might have arithmetic errors, or we might also have an occurrence where posting has only been made to one side of the account. So we've had a debit posted, not a credit, for example. So these are going to affect the trial balance. Now nowadays, if you're using a piece of software for your bookkeeping, it doesn't tend to let you post uneven debit and credit entries, but it did back in my day when I was a student. And also it allowed you to post arithmetic errors, and also it allowed you to post only to one side of the accounts. So you don't tend to see that in bookkeeping software anymore. Doesn't mean it doesn't exist, and specifically if they're using Excel spreadsheets or they're doing the bookkeeping manually, that is not going to occur. And also in some cases systems do fall down, as we know. So don't take that for granted. But let's move on to the suspense account. So what is the suspense account then? This is basically a temporary account used when the trial balance does not balance. So when you've reconciled everything in the exam, you should have nothing left in your suspense account whatsoever. And the thing with a suspense account is it can be both a debit and a credit, depending on the question. So Don't just try and learn suspense accounts being on the left hand side or right hand side, or a debit or a credit, or asset or liability. It could be either in the exam, so just be aware of that. Now, in some cases, when you're faced with a question in the exam, you might not have a suspense account initially, and they might want you to record a suspense account and the entries in there where we've got a difference. But ultimately what they're wanting you to do is investigate and record corrections via a journal entry. So it'll be debit or credit to suspense account and debit or credit to whatever the other side should have been. So again, that suspense account should be 0, nothing in there by the time that we're done. So that's the end of this video. If you did find it useful, make sure to hit that thumbs up, because it really does help push this out to other students who could use the video. In a future video, I'm going to be going through some questions and answers, so all around the bank reconciliation for you, and correcting errors as well. So those are the 2 videos that are up at the minute. But also we're going to be focusing on payroll transactions and postings, and receivables and payables ledger control accounts, as well as the VAT control account in future episodes. So watch out for those this week and next. They're all going to be posted together as part of this mini playlist. And if you've got any questions around the topics, let me know. I can always just jump on and answer those for you or point you in the right direction. And always happy to hear from you. But otherwise, I will cut this short and catch you at the next one.